Waiting. All right, go ahead, Jennifer. There we go. Thanks so much, Ariel. As she mentioned, my name is Jennifer DiGianardo, and I'm joined by Alston Kilgore. We are both asset managers for the Colorado Division of Housing, the Office of Housing, Finance, and Sustainability. We're going to cover income calculation today. And so just jumping right in. There we go. Our agenda for the day will cover regulations and requirements. So the why behind this methodology we require. We'll go over the definition of annual income, verification of both income and assets. We'll talk about the income you must exclude. We'll go over a few examples and then just end with a few resources to get you guys started. So let's dive right in.
All right, we'll start with the fun stuff, the regulations and requirements. So depending on what type of program you are operating at your site, different regulations or requirements may apply. So we'll speak kind of in a broad sense today about what's required. But if you have a home program or home gap funding at your property, you are using regulations listed at 24 CFR Part 92.203. So it can be a little bit daunting sometimes if you're not used to looking at the regulations, but it is pretty well laid out there. And also your asset managers are here to help you dissect some of those if they're unclear. If you have HTF, it's listed in a slightly different area, listed here. CDBG, CDBG-DR, or NSP, also in a slightly different area. And then if you have state funding sources such as HDG, refer to your use covenant, and we also defer to Part 5, so 24 CFR Part 5, Subpart F. So if you're not sure what type of subsidy or what type of financing you have, refer back to your beneficiary and rent use covenant. It should be spelled out there for you, and you can also reach back out to your asset manager if it's unclear. So for the definition of annual income, we'll just read through this. So annual income is defined as all amounts, monetary or not, which go to or on behalf of the family, family head or spouse, or to any other family member. Any funds that anticipated to be received from a source outside of the family during the 12-month period following admission or recertification, or amounts derived from assets which the family member has access to. And we'll dive into those as well as some examples a little bit later in today's training. So for the verification of income and assets, at initial certifications, all items listed on the application or the questionnaire must be verified with source documents for all DOH-assisted tenants. So you may be aware of during the period of affordability that you can accept different things in lieu of source documents. Just know that at initial qualifications, there's kind of a higher threshold that you need to meet with regards to income certifications. Generally, income verification is valid for 120 days from the date of receipt. So if you're using an employment verification or a bank verification letter, know that that's valid for 120 days from the date of receipt. So it's if you're going to be using that receipt date instead of the date that the document was generated, it's best practice to time and date stamp it when it was received, so that any auditor can know when they come in to do a monitoring when that 120 days started. Your compliance team will be able to know, if the move-in is to occur on 9/15, how recent those documents need to be. All verifications must be completed before the lease signing occurs. So of course, you need to ensure and be able to fully document that your tenants or the beneficiaries of this assistance were income qualified before they were admitted to the program. And in our worlds, we use lease signing, effective date, and move-in kind of all to mean generally the same thing. So I know sometimes folks will sign a lease, but they may not take occupancy until the week later or they needed to move in on a Monday or needed to move in on a weekend, we use that effective date on the lease and or the TIC as that timing to calculate the 120 days for the eligibility to determine that the documentation is valid. And just a friendly reminder to always be using the gross income when you're determining eligibility. If you are certifying home buyers, that's going to be a little bit different for timing for that certification. If you are running a home buyer program, we can speak to that directly with you. The timing is a little bit different for that. Right. And then Jennifer's going to touch on what qualifies for income verification.
Thanks, Alison. So of course, we have many types of income that we have to vary and have to verify in our world, in our housing world. And so first off, when we're looking at wages and salaries, we want to have third-party verification. So that might look like a verification of employment. So the tenant signs a document that says it's okay to reach out to my employer, get my hourly wage, if I'm working overtime, any of that information, how many hours are you typically working, so that we can get a good idea of projecting that income forward. The other option to verify wages and salaries would be to accept paycheck stubs. And it has to be 2 months of consecutive pay stubs. So we have a little bit in August and then a couple later in October. That's not going to work. We want to see all the way through August and all the way into September. It's worth mentioning, you don't back out the deductions for garnishments or pre-tax, post-tax deductions. You want to include that in the gross calculation. Again, consider those raises, any cost of living adjustments, that's what COLA means, or any minimum wage increases, that should be considered in the annualized calculation. If the household or the head, whoever's income you're considering, if they are self-employed, you want to consider the net income from the operation of the business or profession. What does that look like from an income verification standpoint? You would look at a profit and loss statement, personal tax returns with all schedules and those supporting documents. Last thing I would recommend is getting a corporation tax return, just so you can really see and verify what are the numbers from the net income. For payments in lieu of earnings, such as unemployment, disability, Social Security, severance pay, we are going to want a dated award letter. And so you'll typically see this in the right-hand corner in the Social Security award letter, some date that verifies this was issued on September 10th, and we can back that out and say, okay, this was dated within 120 days of that lease up. Typically, we have the COLA increase, that cost of living adjustment. It will be mentioned on that Social Security award letter, and so being sure that that is also considered projected forward. The other thing that could be considered payments or considered income could be a gift from a family or friend. And so we want to be sure we get some kind of statement that says, I, so-and-so's mother, give them $200 a month for groceries, whatever that looks like. We'll want some type of statement verifying that monthly gift. Again, any benefits that a household receives, old age pension, aid to needy and disabled individuals, all of those should be verified with third-party benefit or third-party verification. It's also worth mentioning that we as the state cannot review EIV reports. Those are the Enterprise Income Verification reports, typically seen with Section 8 or Housing Choice vouchers. Great way to verify the income from a voucher standpoint. But Division of the Office of Housing Finance and Sustainability, we cannot use that as a source verification. other item is the public housing, a public housing agency statement. You can do those at recertification, but at move-in, we must be sure that that it's source docs. We can't say, this housing specialist has verified it. We need to see that that document is present in the file. Next is child support. So as you're reviewing an application or maybe the income and asset questionnaire, the household report, money received. And so how should we verify that? You're going to get a court order that can be provided, a family support registry printout at the state level. And so you'll see a breakdown of how much the co-head or the person paying the child support, how much they're paying and how frequently. If that isn't a possibility, you can go to a signed and dated letter from the parent providing that support, saying the amount and the frequency of that payment. And that's for households that have at least 50% of the custody of the child. And so if the applicant is reporting no money received, but is a parent with at least 50% custody, we'll want some type of affidavit that says why money is not being received for that child. And so these are the kind of documentations, whether money is received or not, we need it verified either way. And then just to reiterate this little blurb at the bottom, the best practice is to include the child support affidavit for each child and obtaining that family support registry printout, whether the income is being reported or
not. Right. Just a brief pause before we go on to frequently missed income sources. Just, a reminder when you're working on a file, just like school, to please show your work. It'll result in fewer questions at the monitorings. So if you spoke to an employer or spoke to a bank to get clarification on something, to put that conversation together in a memo to file, including, who you spoke with, date and time, and then the item that was clarified. So if there was, they indicated that there were bonuses, but they didn't clarify what the bonus would be, or that there would be a raise, but didn't state when the raise would take effect. And you spoke with them to get clarification, and that impacted your resulting annualized income calculation. Make sure that's in the file. And if we're doing a virtual monitoring in the times of COVID, to please make sure that that clarification memo gets scanned in and provided on with the income documentations from the source. Also, making sure that you keep the tenant file organized and show your calculation on either tenant income certification or a TIC or an income worksheet or something similar. The state does not prescribe a specific version that we need to see. But as long as it's neat and consistent and we can follow how the calculation was done, that will be sufficient for our purposes. All right. Some frequently missed income sources that merit mentioning on this call. So if there are regular or recurring gifts from family or friends, sometimes those are easy to forget that for our purposes, they count as household income. So that may be rent or utilities paid on behalf of the applicant or resident by a family member or a friend, or if they provide ongoing financial support, either cash or check or direct deposit. Those things are considered income if they're from somebody that's outside of the household. VA benefits or military pay, Social Security or SSI. We generally see those things documented, but sometimes there may be an error in the calculation because we counted the net instead of the gross. If there are regular and recurring withdrawals, such as required minimum distributions from retirement accounts, those need to be included in the income calculation, or income from assets. This is generally going to be a pretty low because interest rates are so low right now on bank accounts and the passbook rate is quite low, but that does need to be taken into consideration in your income calculation. HUD's handbook does have a really comprehensive list of income inclusions and income exclusions, which we'll talk about. So if you're ever, unsure of how to treat a specific or unique type of income, to take a peek at the HUD handbook, which we'll provide as a follow-up with the slides from this training. Listed here is kind of some ways to ensure that you're not missing these sources of income. These are things that Jennifer and I and the other asset managers look at when we're doing the monitoring. So we ask that you double check the application, double check the income and asset questionnaire. If the household provided bank statements, we just scan through really briefly to see if there's regular or recurring deposits that don't match a known source of income that could represent possibly, an ongoing gifts or a part-time job that they maybe forgot to list because they, didn't think that it would count as income for our purposes. If a household member, an adult household member, indicates that they have zero income, it's best practice to collect a zero income form where they'll indicate, how they are paying for their expenses, and sometimes that will help weed out possibly something that the household forgot to indicate. So, if they indicate that they're paying their phone bill with a gift from, a friend or family member, that helps us and helps you to ask the right questions to ensure that you're collecting all possible sources of income for this certification to make sure they income qualify. So we'll open it up now just for a quick question for the attendees. If you have any other best practices when you're income qualifying a household to make sure that you're collecting all possible sources of income. So if anybody has any tips or tricks that they use, they're welcome to drop those in the chat for us to share around.
All right, so as folks are typing in, we can maybe take a brief moment, but in the meantime, I will go ahead and cover asset verification. When a household reports that they have a checking account, it must be third-party verified. You could get a verification of deposit. That is what that VOD acronym stands for. Or you can get 6 consecutive months of bank statements. And so that'll be similar to that paycheck stub caveat that I had mentioned. We want them consecutive. So these months should go January, February, March, April, May, June. So making sure we get all through those 6 months. The calculation from that 6-month average is a requirement. It can't be the current balance. And this is where it gets tricky when you're verifying between checking accounts and all other regular accounts. So checking account, just a rule of thumb, there needs to be a 6-month average balance considered. For all of the other accounts, thinking about IRAs, savings accounts, anything that's truly not a checking account, you're going to want to get third-party verification of deposits or 2 of the most recent bank statements. For any of these savings accounts, IRAs, all other deposit accounts, you will consider the current balance. I briefly mentioned just other assets that you could verify. So those Direct Express or those cash cards, the funds from the state level, A&D, old age pension, Social Security, would go onto the Direct Express card. And so we want to see the cash value, the current value of those cards. Another asset could be the retirement or a 401k, real estate, life insurance, and any assets disposed of for less than fair market rate value. So all of these need to be considered when verifying the income from the assets. A rule of thumb again, if the tenant or the client has access to it, we need to consider the income that's generated from the asset. And how do we determine what the income actually is from that asset? So you consider imputed versus actual asset income. So if the total value of all of the assets is $5,000 or more, you need to calculate the imputed income using HUD's passbook rate, which is currently 0.06%. This passbook rate, it varies from year to year, so it's important to check in to make sure that passbook rate, if it changed, that you update any of the forms that you're using, any of those calculations in an Excel spreadsheet. Make sure that gets updated as time goes on. You'll add the greater of imputed versus actual asset income to the calculated gross annualized income. And so there's two things. If the asset is over 5,000, that's when you would do the multiplication with the passbook rate. If it's underneath that $5,000, you'll consider the actual income. And I saw a question pop in as I was.
We do have a question, Jennifer, here. It's from Jackie's asking, for savings account, do we calculate the same as a checking account for CDBG and HDG?
Great question. So for the Division of Housing, we use home as our safe harbor. So we applied this methodology to all funding sources across the board. So you'll want to do this for CDBG, NSP, HDG, HSP, all those funding sources. Really great question.
All right. A brief note on some excluded sources of income. So there's a few bullets here. These are probably the most common ones. Of course, Part 5, the HUD handbook, has all of the exclusions that you could possibly want for income and for assets, because there are some assets that are excluded from calculations. But for income, you're going to exclude any income from the employment of children under the age of 18. If you have students that are 18 or older, you're going to exclude earnings in excess of $480. Any temporary, non-recurring, or sporadic income. And that is the one that is the most confusing, I think, across the board to define temporary, non-recurring, or sporadic. So that would be things like, I mowed the lawn for my neighbor one time. He gave me $20 when he was on vacation. I'm not going to do it again. It was just a one-time thing. But if every 2 weeks I mow my neighbor's lawn and he gives me $20, that's regular and recurring and would be included. So, really working with the tenant or the resident when you're doing this certification or recertification, to really understand what that income is, and then to also be putting that in a memo to file of how you determined that that income was, fit the determination that it was to be included or excluded, so that if when we come to do a monitoring and we see lawn mowing on the application, but we don't see it documented in the file, we have some sort of clarification to substantiate the decision to include or exclude. This also comes up a lot with people working in the gig economy. So people that are driving for Uber or delivering for Grubhub, those things that they're doing, and they may be intermittent, they may not be consistent, but they are recurring. So they are doing this as a source of income for their livelihood. Those sort of things would be included. Also excluded is the full amount of student financial assistance paid directly to the student or educational assistance, or deferred period amounts from Social Security or SSI benefits paid in a lump sum. So if somebody just applied for Social Security and they got a large lump sum retro payment, that amount went into their checking account. It would be, hitting against their income calculation in the form of the interest, if applicable. But that lump sum is not to be annualized or projected forward. Just their regular recurring monthly benefit would be.
All right, so we are going to dive into our first example. We have Nettie, who is a single individual. They are applying to move into a unit in Denver. And we're looking at Nettie's income and asset report, and she reported employment, a checking account, and a savings account. So for Nettie, she earns $15 an hour, working 40 hours per week. Her checking account has a 6-month average balance of $5,000 with no interest earned. And she also has a savings account with a current balance of $4,000 and an interest rate of 1%. And so one thing that we want to be sure to consider is the checking account and the savings account, those combined, that's over $5,000. So let's go to that determination. So here we are with $15 an hour employment. She works 40 hours per week, and there's 52 weeks in a year. Her total annualized income from employment alone is $31,200. As I mentioned earlier, she also has that checking account with a 6-month average balance of $5,000. There's no income earned from that checking account. She also has a savings account with a current balance of $4,000, and her earned income is $4 because we got to consider that interest. The imputed asset income, so thinking that $5,000 and the actual earned $4 times, you have $5.40 total from that imputed asset. So $5,000 plus the $4,000 in the savings account times that passbook rate 0.0006. Nettie's annual income is $31,205.40. We don't really worry about the change. So for that, I would round down and say $31,205. All right. No questions on that one. Give a second for folks to chime in if they need to.
All right, example 2, things are going to get a little more tricky here. So in example 2, we have another household that is applying to move into a unit in Denver. She's reported on the income and asset questionnaire that they have income from Social Security, income from pension. Their assets are loaded onto a Direct Express card, and they also have an IRA. And so when we're doing the income determination for this household, regardless of which program it is, we're going to rely on Part 5. So we're going to collect third-party source documentation of their Social Security and pension in the form of a dated award letter. We're going to verify the current cash balance on the Direct Express card. Sometimes you're able to get a statement for those because you're just taking the current balance. You'll only need one. Those can be notoriously difficult to obtain. So if you're not able to obtain a statement, we understand. It is permissible then for the household to get a slip from an ATM that shows the cash balance and just include that in the file with a copy of the card so that those two things can be linked. I would suggest just making sure that the household member's name is on the card so that you can have something that ties that asset to the household. Sometimes those cards will just say account holder or beneficiary, something really vague. In best practice for that would be to include a memo to file from the tenant saying, card ending in 123 is my benefit card. I attest that this is my sole asset. Something straightforward like that. Doesn't need to be super complicated, but just tying it to the household. So in this example, the current balance is $800. It is assumed by HUD and us that there is no interest earned on those accounts. You don't need to further verify that. And then this household also has an IRA. It has a balance of $175,000, and she has a required distribution of $300 a month. So if there was no required monthly distribution, we would count that the cash value of that after any cost to convert to cash as an asset. She is deriving income from the IRA. So in this scenario, that IRA is acting as an income source and should be verified with source documents as such. So in the next slide, we'll kind of walk through how these amounts were treated and or annualized. So for her income, all of these pretty straightforward. Monthly income just times 12. And the assets, because they were below $5,000, we did not need to do two calculations. We just needed to calculate, the balance times the interest rate, which in this scenario is 0. And we didn't have to calculate the HUD passbook rate, that 0.06% that Jennifer mentioned, because the balance was not over 5,000. So VITA's total annual income was $22,608. Pretty straightforward one. Any questions on that? All right. I'll hand it back to Jennifer for example 3.
Great. So for example 3, we have a lot going on with this one. We have a family of 4. They've applied for a home assisted unit, a DOH unit. And on the income and asset questionnaire, they have reported that dad earns $9.75 an hour. He's working 25 hours per week. Mom is also working. She earns $8.15. She's working 40 hours a week. We have a son who is 19 years old. He's also a full-time student. He earns $8 an hour, working 10 hours per week. The daughter, she's 16 years old. She's a high school student, works summers, just 3 months, $8.50 an hour, working 20 hours per week. Dad and mom, they received a gift of $10,000. They invested $6,000, so a part of that gift went to a car, and the other $4,000 went into their savings account, and that has an interest rate of 0.19. That's the only asset they have, no other assets. So for dad, we take his hourly rate times the 25 hours he works times 52 weeks in a year. Mom, same thing with her, $8.15. She works 40 hours a week, 52 weeks a year. Mom and dad have that $4,000 in the savings account. As a reminder, we're considering, that $6,000 that went to the car. That is no longer applicable because their savings account is less than $5,000. We're just going to consider the income, the interest rate from that savings account. So 4,000 times the 19 is $7.60. We also have that son, and if you guys remember, he's 19 years old, and he's also that full-time student. So this was the trick in this example. So he's got $8 an hour, working 10 hours a week, times 52, that's 4,160. We're only including 480 because he is a dependent and a full-time student. With the daughter, she's working. We remember she has that summer job. 0 is included from her income because she is 16 years old. She is under 18 and she's a full-time student. So taking dad's wage plus mom's, the $7.60 from the asset plus $480 from the son gives you $30,114. So that one had a couple tricky moments in it. So if anyone has questions, please throw them in the chat. Give you guys a second to do that. That is all with our examples and the income determinations. We're including a few resources here. So the HUD occupancy handbook, the chapter 5, which helps determine income and calculating rent. HUD appendix 3, this is a really good resource. The acceptable forms and verification types. I refer to this almost weekly. And then last is the technical guide for determining income and allowances specifically for that home program. And so this is chapter 3, calculating annual gross income. In addition to these 3 resources, we will send out 2 documents as well, the part 5 and then what was the other one? I already forget. There's two documents that we're going to send out. Sorry, I got distracted with the, thank you. I got distracted with that question. So let's see what that question was.
Hey, are you going to read it, or would you like me to, Jennifer?
I can read it. Thank you. About inheritance, is there any difference between a one-time payment or ongoing payments? It's a really good question. So if it's a one-time payment, we would consider that sporadic because it's not happening ongoing, right? So we can't expect to receive it monthly or every 2 weeks. So we would consider that. We would not include that in the income calculation. That's a great question. What else?
I will
sorry, Alton.
I will mention one thing about inheritance. Just kind of piggybacking off of what Jennifer had said of, where does that land? Does it land in a checking account? Then if yes, then, it may impact your income calculation via any interest earned. That won't be considered or annualized, though, as a source of income like ongoing payments would. I have seen inheritance passed down in some properties that I've monitored into special needs trusts, which are, kind of a unique setup of what, if it ends up in a trust, it might be treated a little bit differently. But those can be looked at, on a case-by-case basis, and we're here at DOH happy to help navigate those if it doesn't just end up in a checking account or come monthly directly to the tenant or applicant. Great question.
That was a really good point. Thank you, Alton. I'm going to go to our next slide here. This is some contact information, both our emails, where you can find our offices, and our phone numbers. Please feel free to reach out to Alton or myself. Of course, you can reach out to your asset manager. We highly recommend that you reach out to them. Any questions, we're here for you, and happy to just navigate those nuanced incomes. It's inevitable, so happy to navigate that with you. And if that is all, thank you so much for attending today's webinar. And again, please reach out. Alton and I are more than willing to have these conversations, figure out annualized incomes, all that good stuff. Anything that relates to compliance, we're here for you.
Thanks, Jennifer. Before you all go, I know that it can get confusing of knowing like which funding source should follow which rent and income guidelines. So I'm going to send our a little link in the chat here for you guys, just of a chart we have on our website that can, if you're ever in doubt, I recommend going to this chart and looking at which rent and income limits are required for which funding source. Also check out our website. It's been a little bit updated with more resources, a more fun layout. And we appreciate all your guys' feedback. Thank you so much for joining us today. If you have any suggestions on future webinars that you would like for us to host, like please send them my way or Jennifer's way, because we want to really have this, be a helpful resource for our, our partners. So thank you all for joining us today. If there's no other questions, you're welcome to have 19 minutes back for the hour. So thank you all, and happy Friday. Hope you all have a great weekend.
Thank you.